Hey Joe, how you doing, baby?
Mate, I'm doing well. How are you doing?
Yeah, man, I'm good. Do you know what? This weather is amazing. I always, feel good anyway, but this weather is just beautiful right now, isn't it? Over here in the UK.
Oh, mate, it's so good.
It's so stunning.
Good. I've even managed to get like a tiny bit of a tan as well, so that's how you know it's good.
Yeah, man, you got to soak that up. It does beautiful things for the mind, I think, massively. So, yeah, dude, man, another full-on week. Absolutely insane.
Literally.
So a few things to go through. I think if we start off at the beginning of the week, the commence of the week, it was very much about risk appetite, appetite for risk, dollar downside. I think something that was very much dominating a lot of sort of news and our contacts were picking up was about, the massive, the noticeable drop in COVID-19 cases, really starting to decline. No sign of a second wave, right?
Yeah, exactly. It's that second point that's really key. Obviously, cases have been dropping, but the key thing is that cases are dropping despite economies reopening. So there were a lot of fears that, when all these economies started reopening, like in Europe and stuff, cases would start rising again. And then, like you said, second wave, more lockdowns, all this kind of thing. And that would be terrible for the global economy. But we haven't seen that so far. So fingers crossed, we can keep heading in the right direction. And that should be good for risk assets. Yeah,
exactly. I mean, the likes of everything, basically, other than dollars been outperforming the greenback. Euro's been flying, which we'll get onto those specifics there for Euro, AUD, NZD, CAD, GBP, all gaining some serious ground. Despite obviously that heavily outweighing how much risk is still on the table right now, between the world's two largest economies, and obviously we've got that today that, what's going to happen, who knows, we'll have to see with Trump. But obviously China, thing is with China, man, they're pressing buttons because obviously they gave us the warning last week about this potential security legislation for Hong Kong. The US warned them, if you're going to do this, you guys are going to face some punishment. And China still went ahead and did it.
Exactly.
Man, tell what's going to happen, dude. What's happening?
Oh, who knows what's going to happen? So, just for the people watching, we're recording this in sort of early on Friday, so we haven't yet had the Trump press conference. But pretty much the key moment now for the rest of the week is this Trump press conference. Is he going to announce an end to the US's special treatment for Hong Kong? That would basically mean tariffs on Hong Kong, just like they have tariffs on the rest of China. That would be, that'd be a big negative for risk appetite because China's going to respond. And we don't know what the Chinese are going to do. More tariffs, who knows? But it's back to that tit for tat war, kind of trade war that we had in 2018, 2019. And it looks like we're going back to that. So we're going to have to see.
And the thing is as well, like if you think back to 2019... there was clear moves. Obviously, we're in nice trending markets, I think, for 2019 in comparison to where we're at the moment, how choppy things are. But, there was clear bouts of, safe haven. Yen was being bought on dips. Gold was being bought. But, right now, things are obviously not making much sense in the FX world. Even when you look at stocks are still gunning for it. Well, obviously, today we've come off Friday ahead of the Trump press conference. But certain things in asset classes have not been making sense. It almost irritates me when it just does not make freaking sense.
Yeah.
You know what I mean?
Mate, agreed. It's like I might as well go on to one of the other things we were going to talk about. The dollar. Like this week, despite all this US-China build-up of tensions, which looks to be about to really go off tonight with Trump, dollar has been getting absolutely slammed this week and in the last 2 days especially, and a lot of people have been talking about month-end flows being a big negative for the dollar. But it's just weird how 1 week dollar can be such a safe haven and so bid off of these themes.
I know.
And then the next week dollar doesn't care anymore. It's getting sold.
Literally. I know, it's insane, isn't it? It's insane just how, oh man, the market, look, the thing is, you can't fight the markets. They're going to do what they're going to do, right? You just got to go with it, understand your reasons as to why, and just stay on top of, the chopping and changing. Man. Exactly. What else have we had? Let's talk about, one of the key reasons with Euro absolutely flying, outperforming its peers, that big boost, the European, the rescue fund, right? It's quite decent, promising.
Definitely. So obviously last week we had the French-German proposal, which Euro really liked because it showed that Germany was like open to the idea of that joint EU debt. But then obviously there was quite a lot of division still with the frugal four. We called them like Netherlands, Sweden, Austria, Denmark. This proposal from the European Commission is seen as like trying to bridge that gap between the French and the Germans and the frugal four. And it looks like quite a nice fudge, kind of a really good compromise. Obviously still a lot of negotiations ahead, but I think there's enough momentum now to get a deal, basically.
Yes.
And it looks like this deal is going to include that joint EU debt, which is what the market really, really wanted.
It wants,
and that is partly why Euro is doing so well.
Exactly. It needs it. Like the Eurozone need it right now. Like, you know, they can't be messing around. They've got to pump that money in. So many economies that are very reliant on that. And I'm just looking at Euro just while we're speaking about on the chart. And dude, we'd been ranging for Euro really since the back end of March, start of April. You know, been in this range of sort of 200 pips, the top really just shy of 110 to the downside around, you know, 107.80. You can just say 108, you know, 200 pip range since April. Like, and now we've broken out of that range, that structure there. It seems like Euro has some freedom to carry on to run. And the thing is,
100%.
You know, and I think one thing that we sometimes that I forget is, and I think other people do as well, is that Euro, you know, Euro's one of those sort of secondary safe havens as well, isn't it? You know, traditionally.
Yeah.
You know, so
yeah, definitely. I mean, because it's had a negative yield for all these years, for like I don't know how many years, maybe like 4 or 5 years now. It's been in negative interest rates, and that means that people borrow in euros and get paid to do so, and then they'll put that money in other countries where they get like a higher interest rate, like emerging market countries where maybe you get 15% or something ridiculous like that. So you're getting paid to take euros and then you're getting paid to stick it in these emerging markets. And obviously in times of, you know, risk off, you get those flows going back from those riskier places back into the euro. So that, just generally speaking, is a euro positive, like you say.
Agreed. Nice explanation. And look, let's just jump over to GBP. Surprisingly, GBP's been up through this week, holding, you know, generally decent gains. Both when I'm speaking, obviously the most traded GU, GJ, and you know, man, there's still a Brexit stalemate at the moment. Why does GBP just continue to rally, man? And even speculation of negative rates.
Yeah, I know. I mean, I've got a couple of theories. Like the first one is obviously dollar's been quite soft this week, which is a big help for GBP. So that's one. Also, you know, in like the last couple of weeks, a lot of other FX has been rallying, but GBP's been underperforming for quite some time now. So maybe it's all in the, like you could say it's kind of priced in now, all this Brexit pessimism. But then again, we did have that story about the EU getting prepared to soften their position on fisheries earlier in the week, and that did help GBP. So that was actually some Brexit optimism for once. True.
But then we've just had a bit of pessimism now. What was that headline that you picked up?
Oh, yeah, literally, just as we were starting to record this, just an EU trade advisor saying that they don't think they're going to get a deal on fisheries, basically. So, who knows?
Who knows, dude? I mean, man, there's so many talking points. All right, and then, look, I think one thing to wrap off on was obviously this dollar weakness. Right? The month-end flows. Been absolutely hammered, and I think it's beautiful because you picked up something that we picked up from our contacts with the Citigroup with their month-end model, you know, and it was from the start of this week, as we covered for the members, it was like leaning towards to seeing that dollar weakness, right, in favour of the month-end flows. Man,
exactly. It was really interesting, and it wasn't just them. It was loads of other institutions. I didn't get to see their research notes. Like I got the Citi one. I didn't get to see the other ones. But a lot of people were calling this dollar weakness. And like, I think the reasoning behind it was in May, US assets, so like US equities and bonds, made quite decent gains, which meant that asset managers, by the time it came to the end of the month, they were actually overweight in terms of like their portfolio allocation to the US.
Makes
and people
sense.
were saying, Yeah, so they sell some of those assets, sell some dollars, and move it, abroad.
Yeah,
so
exactly.
that looks to have been what happened.
Yeah, because I think some people, it's like the retail market, without undermining their knowledge, but I think not everyone is aware. Not everyone's aware that, those are normal FX flows. It's not just about speculative FX. There's flows that are being done by institutions, pension funds, so on and so forth, to balance their books. That's a real FX flow.
Yeah, mate, exactly. It's so important to, if you can, try and get some inside intel on like what's going on in that sphere. Definitely.
Exactly, it's juicy stuff. All right, dude. Obviously, that's pretty much it for this week. Next week's a big one, right? Central bank action from the Bank of Canada, RBA. Some big data points, yeah?
Yeah, exactly. RBA, BOC, but also ECB. That's probably going to be the big one, because most people expect like a big increase to the ECB's QE program. So that should be a juicy ECB meeting.
Okay, now quickly on that, Joel, because obviously we're receiving this sort of stimulus from the Eurozone, which is more seen as, is a nice injection into the economy. It's positive for Euro. With the ECB, obviously the quantitative easing, the bond buying side of things, more dovish for Euro. But do we still rally because of all of this like encouraging effort from the Eurozone, from the governments? Is this a bullish sign, or is this a dovish thing for Euro? Negative.
I think it's still bullish. Still bullish. So for example, I think if the ECB next week, if they don't increase their QE, which they might not do, that'll be a big letdown, and I reckon you'll see Euro sell off on that. So it's weird how it can be opposite sometimes.
I know. Yeah, I agree with you massively on that. Yeah, definitely. Yeah. Okay, nice.
Yeah.
So, dude, some juicy stuff. And have a great week. Look, have a great weekend. Enjoy the sun, baby. Let's get it.
You as well, mate.